good for them. Okay, so income tax withholding. So the calculation, obviously we have, employees have to complete the W-4 form. Or this is the form that informs the employer how much to withhold from an employee's paycheck. The employee has to fill it out, not the employer. The employer can't really even give them any advice on how to fill it out. All they can tell them is go consult your tax advisor. So the W-4 these days looks like this. It should be pretty familiar to all of you. Identifying information up here. We have our filing status as a box. This is one of the things that changed. It used to just be married or single were the choices. Now we've got our 5 filing statuses that are chosen up here. And this corresponds then to, this helps us to determine how much is going to be withheld. Part 2, if you recall, we've got this check box here that we talked a lot about this in payroll accounting, this check box. The concept behind it is for individuals that have 2 incomes in the household, that if the box is checked, that means you have 2 incomes, and it may be an individual that has multiple jobs, or 2 individuals and each of them have a job. If it's relatively the same income, then this box is checked. And you'll see when we go through the calculations, the difference between whether or not the box is checked or the box isn't checked. There's going to be additional withholding if the box is checked, okay? Step 3, this is where dependents are claimed. This corresponds with our child tax credit, which we just went through. So what, if an individual claims their children on the W-4, this essentially means that they're going to get a prepayment of that child tax credit. So the amount that is, so you can see up here, they've got 2 children that are under the age of 17, so they would qualify for that full $2,000 child tax credit. This $4,000 is going to be spread out over the course of the year as a reduction in the amount of withholding from this individual's paycheck. So keep that in mind when you guys are filling out W-4s as well, that if you enter that in, and they don't really tell you that. They don't really tell you what the effect is going to be of making these decisions, because a lot of people they want that credit, but they also like to get their refunds. So, you know, if you claim it here, you're getting that refund up front, or you're getting that amount up front. Other dependents, so if we've got, and remember this is the credit for other dependents, so the number of dependents that are maybe over the age of 17 or that don't otherwise qualify for that child tax credit, but do qualify for the credit for other dependents, we're going to multiply the number of those individuals by 500 and put that total here. So again, that's like a prepayment for that particular credit. Step 4, and all of this plays into the ultimate calculation of how much to withhold. Step 4, if there is other income that is not from jobs, so if you've got retirement income, Social Security income that's going to be taxable, interest income, dividend income, and you don't have withholding from it, you can include that income here, and that withholding will essentially be calculated into the withholding from the paycheck. So it's a way of prepaying those taxes as well, but from different, your wages, rather than from this source of income. Additional deductions, so if individuals are going to itemize their deductions, then there's a separate worksheet here where you can calculate an additional amount. Actually, this would be a reduction in withholding again. So line A would be an increase in withholding if you claimed anything there, because that's additional income. Line B would be a reduction in withholding because that is an additional deduction. But again, just like with the child tax credit, if you're claiming it here, it means you're not going to get it on your tax return, right? So whatever, you're not going to get the tax benefit on your tax return. You're still going to have to report it on your tax return, but you're choosing to get a prepayment of that benefit. Does that make sense? Okay. Extra withholding, so if you want just a flat additional amount of withholding, so you do all the calculations and you still don't think that that withholding amount is gonna be enough, you can just put a number in there, and every paycheck, that additional amount, flat amount, will be withheld from your paycheck. And then the employee signature as well. Lots of supplemental worksheets that go along with the W-4 form. So this is the multiple jobs worksheet. So individuals that don't check the box can instead do this calculation on the multiple jobs worksheet, which is page 2, or they can use this online estimator, the IRS. If you take a look at that estimator sometime, it's pretty complex. It's essentially like preparing your tax return, all the questions that are asked. And you can go, if you go through it, those of you who've gone through this class now would be familiar with all of those questions that are asked on it. So it's kind of like a TurboTax kind of software application, but it is rather complex. So but it would get you, as I say here, it can get you the most accurate withholding. Again, you're kind of having to have a crystal ball and determine what amount what your income and expenses are going to be in the future. And again, so it is just an estimator. But most people don't use that. They'll just either check the box or not check the box. That's kind of the easiest thing to do, but then these other parts will be filled out as needed. I'm not going to go through details. There's another, so here's the deductions worksheet. So that deductions line up there, there's a worksheet that can be done that will help to calculate any amount that would be put on there. You're only going to enter that in, or you're only going to use that if you itemize deductions. As we talked about, the vast majority of taxpayers do not itemize deductions, so most people wouldn't be filling this out. This one is this for 2022? This must be for 2022. Yeah, 2022. The one for 2023, which that's fine, use this one for our purposes and it's this class. The one for 2023, these numbers would be different because these again correspond to the standard deduction. So what you're doing here is comparing what my total deductions would be versus what my standard deduction would be, and the standard deduction is higher, we're going to use that amount instead. I think this is pretty much everything that I just said. Filing status, multiple jobs, dependents, again, we just went through this, so this should all be familiar to you and probably make more sense now looking at the W-4 than it did the first time around when you went through it in payroll accounting. Let's see. Do they have, I'm probably going to show you, I'm going to pull up the form, the publication 15T. I don't know if you guys remember that. This is the Employer's Tax Guide. It had all of those tables and charts, and well, not charts, they're all tables pretty much, for the different methods of withholding. And if you recall, so in that form, we've got wage bracket methods. We've got 2 chapters for wage bracket methods and 2 chapters for percentage method. One is for the earlier method, one is for the later method. Again, we're just going to work with the later method here. So we've got the wage bracket, and we've got the percentage. So wage bracket, this is a table that we're going to look at. So remember that table though only goes up to a certain amount of income. It stops. If we have individuals that don't fit on the table with their income, they're going to have to use that percentage method. Okay. Both of these, do you guys remember we need 4 pieces of information in order to calculate using either one of these methods? Do you guys remember what those are? Filing status.
Wage.
Yep, taxable wage. Because remember, we may have pre-tax deductions as well. So not necessarily the gross wages, but whatever what those taxable wages are. What else do we have? Sorry? Well, we would need that. This is like a basic one. These are the basic 4 pieces of information that we need. If you do have dependents, yes, you would need that if you're going to claim that child tax credit. So, but these are just like the basic 4. You guys remember?
Checkbox, no checkbox.
Checkbox, no checkbox, right? What's the last one? That's okay if you don't remember. Pay frequency. How often are we paid? Weekly, bi-weekly, semi-monthly, monthly? Because that's going to determine which table we have to use, right? So these are the 4 pieces of information we need regardless of the system for 2020 and later. There's a couple of differences with the earlier method. With the earlier method, just kind of as a reminder, and I'm not even going to write it down, but instead of filing status, we need either married or single. It's just a box, whether you're married or not. Not necessarily your filing status. We still need the taxable wage. We still need the pay frequency, but instead of the checkbox, we have those allowances. I don't know if you remember that, where you'd have to multiply the number of allowances claimed times a certain number based on the pay frequency, and then we'd subtract it from our taxable wage before we applied the tables and all that stuff. But for our purposes, this is what we need. And we can get all of that information. Well, we get this information and this information from the W-2, right? I'm sorry, the W-4. So that's on the W-4. This is calculated. Maybe each pay, maybe if it's a salaried individual, it's, we already know what it is. And then the pay frequency, well, we just know that based on the employer, right? I don't quite know how to describe where you would find that information. You should know that information if you're working for the company. But that's where you would get all of that information. Okay, so let's see. What else we have here? Appendix. Okay, so this is for automated payroll systems. They like to use this table. You would use this percentage method. Again, this is just the percentage. They don't have a wage bracket method for automated payroll systems. This is when you're kind of starting with a salary. You can figure out, and it's equally divided over the pay periods. So we'll use this to do the calculation here for Audrey. So Audrey is single. She earns $1,000 a week, so she's weekly. Right? Weekly pay. Audrey has only one job, so this is no. Did not complete steps 2, 3, or 4. That means she has no dependents. No, she's not claiming the child tax credit. She got nothing as far as deductions or anything like that. Her employer uses Table 1 percentage method for automated payroll systems to calculate her payroll. So 52,000, we can use this worksheet to go through and calculate what our adjusted annual wage amount is. So, what did they do here? Oh, okay. I don't know where the 12,900 and 8,600 come from. One thing they didn't give us, did they say she was single? Yeah, she's single. And she's making 52,000. So we got all 4 pieces of information for Audrey. Using the worksheet, employees' taxable wages this payroll period, 1,000. Multiply that by the number of pays. She's 52 weeks, so 52,000. Enter the amount from step 4A, there's nothing in step 4 on her, so we'd have a 0 there. Add amount, add line 1C and 1D, 52,000. If the box in step 2 is checked, enter 0. If it's not checked, enter 12,900. If they're married, filing jointly, or 8,600 otherwise. So in her case, it's not checked, and she is single. So we're going to enter 8,600 here. We're going to subtract that amount from the 52,000. It's going to reduce her withholding because she doesn't have another job, right? So she doesn't have other income to account for. So the adjusted annual wage amount is $43,400. Tentative withholding amount, this is going through, again, this is the percentage method. Remember with the wage bracket method, all we're doing is we would take her pay per pay period, the $1,000, and we would, using her filing status, this information of the checkbox and pay frequency, we would look up on the table to see how much her withholding is per pay period. But her employer is using this automated system that's basing it on kind of on an annual salary amount. So because we're doing that, we have to use the percentage method. And I'll pull up here the percentage method to remind you of how we do that. But if you get lost when doing the percentage method, this table or this worksheet can take you through the steps. Let me show you, hopefully it's here. You guys remember this? You still have nightmares? Yeah, okay. Okay, so 2022 percentage method for automated payroll systems. Standard withholding rates, this means no checkbox. Checkbox withholding rates, this means yes checkbox. So we have no checkbox, so we're gonna use one of the tables here on the left side based upon the filing status. So we got married filing jointly here, single or married filing separately, and head of household here. All right, so we're gonna use single or married filing separately. We looked on the worksheet, remember, we went through to this point, we got our adjusted wage amount, which is $43,400. And we got that by taking the 52,000 minus that 8,600 that they have here on the table, right? All right. So we find the right table, pull this down a little bit. And all the instructions are up there, but if you recall, you have to read it kind of funny. So if the amount, the adjusted wage amount is at least this amount, where are we here, single, at least this amount, but not more than, but less than this amount, then this is the row that we're gonna look at. So in her case, the adjusted wage amount is $43,400, so which is at least $14,625, but less than $46,125. So this is the row that we're gonna use here. The tentative amount to withhold, and this is on an annual basis, okay? $1,027.50, and we'll just put that over to the side. So initially, $1,027.50 plus this percentage of the amount over this lowest amount. So what we've got to do is we're going to subtract. We have to figure out how much, what's the difference between this and then that lowest amount on the table. So what, $14,625? So 3. $29,775. Didn't bring a calculator again. So the amount over $29,775, we need to figure out 12% of it. Multiply that by 12%. What's that amount?
$3,000, I think.
How much?
3,573.
3573?
Yeah, that's all.
We're gonna add that here. gonna add those two together. So we'll take that initial amount, the tentative amount, add it to what we calculated here. $4,650.
You're $1,000 over. 43,400 minus 1,465 is 28,775.
Oh, this is 28?
Yeah.
13, right, wrong, 13. 3 minus 4? 13 minus 4?
43400 minus 14.
Oh, because I had to borrow from here. You're right, I didn't
Yep.
write that down. Okay, thank you.
You're welcome.
28, so it's not 3573, so I
It's-
got that.
3453.
3453. Change these amounts. We're still gonna add that, 3453. So 50, 8, 4, 4, 4480.50. This is an annual amount though. Now, the last part we're gonna do, and this here takes us through all of that, okay? 3453, there, 102,750, 4480.50, we got the same amount here, and then we're gonna divide it by the number of pay periods. 52. What was it, 86.16?
0.16.
I've got a question. So how is it calculated if you don't know what the annual is? So like say the person's like hourly and their hours are sometimes like 20 but sometimes 40. Do they base it off of like an average?
So,
or-
this starts out asking what their taxable wages are this payroll period. And then it's gonna multiply that by the number of pays. So even though it varies,
okay.
that's how you would calculate if you're using this automated payroll system.
Okay, so it would calculate it like each time as if they made that each pay period
Yes.
even if they didn't?
Yep.
Okay.
Yep.
Gotcha.
Exactly. So, you know, if you have varying pay, that might not be real accurate, right? You could be over withheld, you could be under withheld by a little bit more than if you used one of the other methods. But you're gonna get, like, this 8616. So this is the automated system. Here's a manual payroll system. If we were to use this, we should get roughly the same amount. So let's use this for Audrey. I know they've got a different calculation here.
And you said that's calculated at the end of every pay period?
Yeah, this would be calculated for every pay period. No, weekly. So we had 80, what did we say, 8616
Yeah.
was the calculation. Let's use this one. Let's use the manual payroll system. So in this case, again, employees' total taxable wages, so we'd be 52,000. Number of pay periods, this would be 52 pay periods. So add lines 1, A, and D. We wouldn't have anything in C or D for Audrey because she didn't enter anything in step 4. So this would still be 1,000, right? And there would still also, step 4, she didn't enter anything, so we wouldn't have anything there, so this would still be 1,000. So her adjusted wage amount here is 1,000. Okay? Slightly different from what we had over here, which was 43,400. The 43,400 is taking into account whether she has another job or not. So let's see what we've got, what we get here. So our tentative amount, we're gonna use the same type of table, but this is based on, you can see with the ranges, you can tell this is not an annual amount of tax, this is a per pay period amount of tax, because these amounts are then per pay period. So, again, single, standard withholding. So, $1,000 is her tentative amount, which is between $968 and $2280. All right, so our tentative amount to withhold is $4280. Get over here. Plus 12% 10% of the amount over $968. So 1,000, this is gonna be quite different actually, isn't it? So 32 times 12%? There's a big difference here. I don't know why there's such a big difference. So 32, about $4? About 4, roughly? Is it round to 4?
Yeah, because 3.85, so.
Yeah.
85.
So we came to 47. So there is quite a big difference there between using that manual payroll system or the automated payroll system. Why is that so? In this example, I don't know why there's such a big difference there. I'd have to look at that a little bit more to figure out why there's such a big difference between the two methods of withholding. Other than, trying to think.
Where'd you get the $1,000?
Well, $1,000 per pay period, 52 weeks, 52 pay periods a year.
Okay.
Oh, wait. I know why. This is why. The mistake that I tell you guys never to make. I used the wrong table. Semi-monthly. I've got to find the weekly table. I don't know if they have the weekly table here. No, of course they don't. So the weekly table would give us a different amount. That is why there's a difference. Let's see, can we jump to?
Is the weekly table underneath of it?
No, it's not, because they're not gonna, it might be in the appendix. They're not gonna take up space in this.
Well, no, I meant for the automated. Is it, or the table's different?
Actually, the automated is just going to be one table. Because with the automated, everything is, it's based on an annual amount. It's like it's an annuity, like they're treating it like it's one
So can't you use those?
lump sum.
Can't you use that one?
Yes,
That table?
what I was doing was just showing you the different methods
Oh.
of, so there's the automated table, which gives you an annual amount, so you've got to take the extra step of dividing it by the number of pay periods.
Got it.
This method, though, you're already figuring out per pay period. But like I said, I got the wrong table here. Well, let's pull it up. So 8616 was the amount that we withheld using, let's see. So using the percentage method for manual systems, mostly layer, so we wanna make sure we've got, so here's weekly. Let me make this bigger. Now, should make more sense. Okay, so this is weekly, we have $1,000, no checkbox. So 1,000 is between 447 and 1052, so we have 1980. Are we still? Still doesn't seem like it's gonna work. Plus 12% of the amount over 447, so 1,000 minus,
8660.
is it
Same things.
Okay, so, what do we have, this is 553. What's 12% of 553? Isn't that right? So,
It's the same things. 66.36.
66.36?
Yeah.
It's the same.
I feel better now. Okay, so either one, I mean, should get you close anyway. But remember, there's also the tables that could be used. Let's see how much we would withhold if we were using the wage bracket tables. All right, so her adjusted wage amount is $1,000. We're gonna look at the range, we're gonna find her range here, between $9.95, oops. And remember, if it falls right on the line, you're gonna use the next line down. Okay,
86.
so, checkbox withholding, standard withholding single, $86. We're accountants, it feels better when it balances, when it all comes out. It bothers us when it doesn't. Okay? So ringing a bell?
So, sir, if you don't have allowances, you can use this one.
Mhm. If you don't have allowances, yes, you use this. Yeah, don't use allowances. There are tables on here for if you're using allowances within this publication, but I think all of your problems, I'm pretty sure they don't talk about how to do the calculation. Let me double check. If I recall though, they don't talk about, but we can do that if we need to.
That's okay.
Let's see, so this one, so if you look at this worksheet, just one other thing I'll mention. If you look at this worksheet, we figure out that withholding amount before we take into account any dependents or additional deductions or additional income, right? So down here, step 3, we talk about, we account for those tax credits. So for example, and you can see right here what I mean when we talk about how it's a prepayment. So we're taking that $4,000, we're dividing it by, in this case, 24 pays, 166.67. So we're going to reduce the amount of withholding by that 166.67. Multiply that by 24 and you'll get $4,000. So you're getting a reduction in your withholding by claiming that up front. If there are, let's see, anything in step 4C, we would make another adjustment there.
So if people claim it when they file their W-4, do they also claim it when they file the 1040 to like
Yes.
balance it?
Yes.
Okay.
So on the 1040, you're still going to claim the child tax credit. It's just that the payment,
You've
already got the benefit. Yep,
Gotcha.
you got it. You got it ahead of time. Okay. Let's see. What else do we want to say here? So we could look at Mauro Valdez, under the age of 17, is married, filing jointly. Whew. All right, with a spouse who does not work and who claims 2 dependents. Mauro. Might want to rethink your choices. Mauro is paid twice a month, semi-monthly, and has gross wages of $5,000 each pay period. Oh, well, Mauro's doing pretty well. Mauro also wants an additional $50 withheld. So the proper amount of federal income tax withholding for his paycheck is $380.67. So he's got 2 dependents. Let's see, 10-1. This is Mauro. So that was the $5,000. This was Mauro up here. So, $5,000, 24, pay periods. Let's see. Oh, so this is, yeah, this is going through these tables here. So that's where the 4560 is coming from. He's married filing jointly. So 460 is the initial amount, 22%. And then you can see what they've done is those two children that are dependents, that's where they have included calculations for that amount, for those two dependents. Okay? Questions?
So if somebody is like married filing jointly, I'm assuming that just like one, if both people were just one person, would claim them on their W-4
Yes.
if they did, because otherwise.
Yes,
it would
'cause
be
otherwise you're
not
doubling up.
enough.
Exactly, because otherwise you're doubling up. Yep. So only one, and the same thing with like the itemized deductions, if you're married filing jointly and you've got some itemized deductions, you don't want both spouses to claim the same itemized deductions on their W-4 to reduce their withholding. And the same thing with, so the credit for other dependents as well, or, like other income. Anytime you have a joint return, yeah, you don't wanna double up that on the W-4s. You wanna make sure,
Except for like the check boxes, like both
Yeah.
people would have that checked because the other
Well-
person works. Or would
Back
just
up
one
here.
person check the box?
where are we here? Well, all the way back up. Okay. So if there are only 2 jobs total, you may check this box. Do the same on the W-4 for the other job. This option is accurate for jobs with similar pay. Otherwise, more tax than necessary may be withheld. So, yes, both can, if there are 2 jobs, so for each job, you can check that box.
So even if it's not like the same person working both jobs, like
Right.
each taxpayer would
Yeah.
check it if it's a joint return?
Yes.
Okay.
But you don't have to. I mean, if you wanted to have more withheld, if one of the employees wanted to have more withheld, they could skip checking that box. They don't have, you don't have to check that box.
So if you check it, it withholds less, and if you leave it unchecked, it'll withhold more?
Mhm. Yep. Let's see, what else do we want to say? Did I get that right? So is it all coming back? We already did this. Wage bracket method. We looked at that table. We looked at Audrey. Again, $86. We already looked that one up. We understand why there's, you know, why the percentage method is gonna give you an exact amount, whereas the wage bracket method is going to give you a rounded amount, because that wage bracket method is for a range of income, right? So we've got here $10. What else? So this one's just, this is the wage bracket method. So there's Audrey, 86. Oh, they did have it. I just didn't scroll down far enough. So again, you can be, you can over withhold, but you're not supposed to under withhold. And it's the responsibility of the employee, not the employer. Okay. Social Security and Medicare tax. So that was